Welcome to the Retiring Club. My name is John, and I will be your host for this meeting. In this meeting, we're going to talk about taking gains out of the market. As you know, in the middle of July, and right now, which is July 23rd, the market has been surging, and it's a good time for you if you want to be a little bit more comfortable and help build up your short-term investments or your bucket number two to take some gains out of the market, meaning that you today are going to be a portfolio manager. I'm going to show you how I go about monitoring my investments, tracking their progress, looking at when they hit their all time high, and making a decision when I want to take some gains off the table. The reason why I'm doing this, I'm 63 and a half, and I'm looking to try and come out at 65. Now, at 65, there's a certain amount of money that I'm going to need to cover myself. My magic number is $20,000. $20,000 will cover all my living expenses. It'll cover my full Medicare, dental, and vision. I am not going with the Advantage plan, and it will allow me to make all my bill payments and have some cash left over to walk around. Of course, I will have a small pension. That small pension is going to go straight in a specific account to pay the taxes as well as the homeowner's insurance on the condo. So I won't even see that money. And I will be keeping an eye out on my taxes. So what we're going to do is I'm going to bring up a screen share and I'm going to show you some of my tracking methods. It's basically on a spreadsheet, but we're going to go back in. We're going to look at one of the investments and we're going to look at how I determine has it reached its all-time highs, because some of your investments are surpassing their all-time high. They're way above. And if you're over 59 and a half, you don't have enough cash, it may be a good time for you to pick 4 or 5 investments, sell, say, a couple $1,000 out of 4 investment that get you 8 grand, or maybe you'll pick 5 and sell $2,000 worth of shares and you get 10 grand. That 10 grand will go into a money market and we immediately start earning 4%. In case of a down market, you will have some place to draw money on. You won't even have to worry about it. You won't lose any sleep. It'll be business as usual. You'll just wait for it to come back like we did earlier this year, as well as what we had to endure in the first week in August of 2024, as well as the entire year of 2022. Okay. So my name is John, and today we're going to be a portfolio manager. I'm going to show you how to track some of your investments, look for the all-time high, and make a decision on selling some shares and moving it into a money market for your bucket number two. Okay, so I'm going to come back and we're going to go over it together. Thank you. All right, folks. So I picked one of the investments is Fidelity Large Cap Growth Index Fund. There's its ticker symbol. So right across the top, it's got some good information here. It's got the loss, the last price, total gains for the day, the total gain since I invested, the current value, the percentage of my portfolio, the number of shares, and look at what I paid for when this is my initial investment. This cost basis includes all the dividends and all the capital gains that have been put in. Now, I was a very, very low account, and I was told to go out and find my own investments. So I used their search, and this is the one I picked, and it's a big winner. So that my average cost is 1436. I invested 6,000. Current value is 18,000 here. I have a growth of $11,000, nearly 200% since I invested in this. And I do believe it was probably around 2010 or something. It was from one of my jobs that I left. I think it was after I left the recycling company. I was with Fidelity. We sold some. There was some cash, and they told me to go out and find my own investment. So one lady, she told me how to look this up. I scanned over a bunch of them, and I wrote these ticker symbols down, and then I put some money in it, and it happened to be that somewhere around. It's probably more like 4,000. It has been compounding since then. So my average cost base is 1436, 4270 is the last price. These are the gains. So those are very, very big gains. And we're halfway through the year, and this investment is pretty much peaked. 4270, it's showing right now at 4235 on the 5 year. And you can see over the 5 year, it is way up there. If we go back 1 year, you can see that 4235 is its high. The 3 month, look how it's been climbing. 1 month, and then here's the 5 day. This is what it's been doing over 5 days. It's, so that's showing 4260 and 4235. If you look over here, you can see that I have the Magnificent Seven in here: Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Tesla, Alphabet. So this is a very good fund. It's not even that expensive. It's didn't cost me a whole lot. Now, in my case, I've been able for with my moderate income, I've been able to nest a bunch of these together that have these tremendous gains in different industries. So for me, with me taking $1,000, I just went in the other day. I hit the trade button and I put in $1,000 because I knew it was at its all-time high because I checked this chart. Um, they are Morningstar probably has it going back since its inception, and it is at its all-time high pretty much. And so I'm skimming off of this, and I sold 1,000 shares, and it's going to go into the money market. There are a couple other ones that I did as well, but I just, without going too far into this is how you would do it. I have a crude spreadsheet where I put this investment in there. I will put, whatever it was at one day. But what you want to do is you want to go in and look this thing over thoroughly and find out what its all-time high is and make that a column, its high point. And then you keep an eye on it. If you see it going up, maybe put a note in there. So in my little chart, I'm gonna stop this and see if I can get on the other one and show you how I've been tracking these because I got a bunch of them to track. So hopefully this is helping you. This is what the portfolio managers do. They look at these investment market conditions. They'll sell some of these shares. It generates cash for the mutual fund because they got to get paid. They got to pay their fees, and then whatever profits they make, they split it amongst everybody, and that's how you get those capital gains. And then you have the choice: you can let them go reinvest, which they'll buy at a discount. Typically, when they pay out capital gains, the this last price or net asset value, it'll drop a little bit, maybe as much as a couple bucks, and then it'll buy the shares at a discount. Or you could tell it not to invest and let it go into your sweep account, or by default the SPAC, SPAXX, I think it is, the money market, and that's where you would have your cash, and then you can pull out of that as you need it. So this is the way a lot of retirees, they use this technique as kind of like an annuity building thing, because that's what the annuities are doing. They're selling these, they're building up the cash, and they're giving you a part of it, but they have all the rest of it. Okay, because they're telling you we don't give you so much per, um, you know, out of your 100 grand. So let me go back and I'm gonna show you how I've got it all lined up. And hopefully you'll find this interesting um, and useful. So just stand by. I'm gonna come right back. All right, folks. So here is my crude spreadsheet I threw together here. And as you can see, I'm gonna see if we can move it up and blow it up a little bit. So in my case, I've got all the mutual funds listed because I'm the portfolio man. We got something at Charles Schwab, we got the Fidelity, we got the Morgan Stanley stuff, and there's some other ones that aren't even listed here. But anyway, so let's look at the one that we are. talking about today. So here, I while back at $27.97 was an all-time high, and I sold $1,200 worth. In 2024, it reached another all-time high of $33.02. I sold $800 worth. And then in 2025, I think I got a sale price of 42.51. I sold $1,000. So out of this investment, and you've seen those gains, that's $3,000 I pulled out. So that $3,000 is now sitting in the money market. And what I'm trying to do is in the money market account, there was 8 grand. I originally, these investments that have little numbers here, this was the first batch. When I sold these 600, 600, 600, 600, 1,200 here, 600, 600. And what we did was everything is 600 year. About 3 years ago, when the market came back after 2022, these all hit high, all-time highs. And what I did was I sold shares. I was a little bit more conservative, but anyway, I generated $5,000. And then last year, market recovered. I generated a little bit more, 800, 816. That's 2,400. So what I wound up doing is I threw that in to the money market, and it had grown by about 500 because the 5,000 was in a JP Morgan CD at 5%. So it was making 250. So it made 500. But anyway, so the round number was 8,000 plus whatever it's been making. Now, my magic number is $20,000. However, if I was let go from a job, I could own my standard deduction is only $15,000. So right now, I'm just trying to get this built up to 15,000. Once I turn 65, I get the Trump standard deduction of 23,000. So what I'm trying to do is build up a bucket number two to have one account with as much cash in a money market. So here's 1,000. I took it out of this contra fund, $1,000. See, it says 2025. It got to 24.34, and I sold it. Over here, I had some notes of 23 from when I was watching it, so it surpassed that. Down here, we had notes of 31.97 over here. It went to 42, so I sold 1,000. And this is my only ETF. This is a Fidelity Magellan. That had did really well, so I sold $1,000 out of that. And that is it. Now I'm going to come back and get ready to wrap this up. We're going to look at the settlement sheet, um, just so that you can see how things go. It settled and transferred to my account. So I got 11 grand in the money market, and I've turned off all of the reinvestment. This account generated these mutual funds from Fidelity all the way down to generated $8,000 last year. So what's going to happen if it does that well this year? The $11,000 when we go into January will be $19,000, and then I hit my mark for 1 year investment. Over here, Charles Schwab, that's hovering at 17,000. So right now, I've got enough to cover me for the most part each year that I need to bridge before I collect Social Security. And all I got to do this is one time. And then once I'm in retirement, I can continue doing this to generate cash reserves for whatever I need. And that's basically how I'm going to do it. I'm going to let these investments make themselves some money. I'll collect Social Security. I'll have plenty of walking around money, but this money that comes out, um, that will be kind of washed if I take 20 grand out by the Trump tax deduction. I can do what I want to do. And if you've been following me, you know I like to travel. So that means I'll be taking so much luxury trips, and it will just stack on top of the Social Security at 67. but I got to have that money available in case there's a down market, because if the market goes down and I don't have cash reserves ready, then we are going to not be able to retire on time. You'll be pulling down at a loss. I won't even care. I go into retirement, give the time to recover. It'll be back like this, and that'll be it. All right. So let's come back and look at the settlement sheet. Okay. All right. So here we go. We're looking at the settlement sheet. I put this trade in over the weekend. It settled on Monday. July 18th is when I looked at this. And then settlement date was Monday. 23 shares, 524, $42.51. So here you can see why I do all this searching for funds that are below $25 and certain things like that, because you get more shares. And the Fidelity Large Cap Growth, it's doing what's called a first in, first out. Those old shares that I bought 10 years ago, those are the first ones to be sold. So, and then it settled at $1,000. But this isn't the only trade I made. So let's just scroll up. Over here, this is Fidelity Magellan. Now, this did it in two pieces. It sold whole shares and got to 973, and then it showed an increment. I don't even think this adds up to $2,000, but I don't care. It's close enough. 0.77 shares. So the more shares you have, when these things start appreciating, that's when you're gonna have more shares to sell, and that's why you got to watch when your advisors are telling you picking these investments. They're like $200 a share, because you're not gonna get that many shares, and so the Contra Fund was also supposed to be on here. I don't even see it. Maybe it's on a different sheet. But anyway, this is the gist of how you will go. Now, you need to keep these documents around, because if you're married, all of a sudden you get divorced and they're going to be like, well, you took this 3 grand out and did you give some to your wife? Okay, well, now you're going to owe her half and all this old kind of stuff. And I've already covered that. Oh, here's a contra fund way up here. So contra fund was at 2344, $42 and 42.662 shares, and I sold 1,000 there. So this is how you can create cash for your bucket number two, and I call it skimming, where I skim off. This investment, that when I got down there, remember I done took 3 grand, and you seen that it had a value of about 18,000 with growth of 11,000. It really should have been close to 15,000 if I never took that money out. But I need cash, and this is how you do it. This is how the portfolio managers do it. Remember, you just do it yourself. You can do some trade now. I don't recommend you do that day trade because it'll cause a tax nightmare. The buying and selling creates a bunch of short-term capital gains, and you got to track and pay all of that. But this is something I just held for a while, and the IRA. Who cares? I pay taxes when I take it out. Okay, so this is it. I'm gonna go ahead and end this. I normally would. I want to feature another guy that I've been watching channel, and I posted, and he told me exactly. He said, "John, make sure you've got some money for a down market." And his name is Drew. He's the guy on YouTube that does all the analysis. Somebody wants to retire at 62. They got 500,000, and he's got the big glasses like I got. But that's Drew, and he told me, he said, John, make sure you got money to cover you in a down market, and this is how I'm doing it, and I'm just about there. Okay, so I'm going to wrap this up. Thanks for listening. Give me some subscribes because I want to do more of this and do a big picture on how you don't have to go out and buy annuity. You can use this if you navigate this. You can have your own annuity. You don't have to go out and buy one, tie your money up. And that's what I want to show everybody because that's what I'm gonna be doing. Okay. I'm gonna end this. My name is John. We're gonna end the meeting here. And this was taking gains in a sizzling uh bull market taking your gains as a portfolio manager. Thanks. Give me some comments and likes, and please subscribe. Thank you. Have a good night.